Okay, good afternoon, guys. Welcome to another live trading session with me, Steve Ruffley. So today, the Bank of England. I know everybody is probably focusing on the ECB, and it almost seems like we were, I don't know, a kind of like a little bit of a non-event and a sideshow to the main event with these announcements. But again, I see there's so much potential in the Bank of England. And last time we traded it, we did see some good movements and some trading opportunities. So you can never discount what's going to be said from the Bank of England today. There's still a lot of uncertainty in the markets, a lot of forward guidance yet to be had. And it's certainly not clear cut as to what the Bank of England are going to do. Now, I've maintained that I think the Bank of England are going to be the first to move on rates. Now, probably going to see the ECB move on rates today first, but that's not really what I meant. I meant by the inevitable raise in interest rates, okay? And that's something about when I talk about the change in interest rates in the first real country to move. I'm talking for a positive fact. Now, everyone's going to see that if the ECB do in fact cut their interest rates, I'm looking to cut all rates today, the marginal deposit and the headline rate. I don't see this as good news. I don't see any of it as good news. I think it's desperate measures by the Eurozone, desperate measures by Mario Draghi to try and bring some semblance of support into the banking structure, into the European Union, and really for the European Union to look solid, but only on global terms, only to world leaders. It's not going to help the people of the Eurozone. So really, I think, although anything that does happen today that is perceived as positive, as in the cuts, as in the stimulation to the economy, it's going to be good for a very, very short term. And then the realization that the Eurozone is fundamentally flawed is going to then send the markets into turmoil. I'm much more interested in focusing on the Bank of England today and understanding what Mark Carney and the Bank of England plan to do to really maintain the small growth we have, but also stimulate the economy in the right way. We all know that, again, people are measuring the wealth by the rate in house prices as they go up. And I'll go through some stats and data a little bit later on, but that's unsustainable. The whole point of recapitalising the banks was to lend to small businesses, to mid-term businesses, to stimulate the growth and economy in the right kind of way, job creation. And that clearly hasn't happened. So interesting to see what the Bank of England is going to do. And I think it's much more interesting what the effect is going to be on the FTSE, on cable today, than what's going to happen it won't be more exciting or interesting, I guess, but it'll be much more long-term. It'll be able to make me have a long-term confidence and have an understanding of what's going to happen in the UK rather than what's going to happen in the ECB, which is going to be a bit of a bloodbath. There's going to be, big sways, of currency movements, probably a chop in gold, something, significant is going to happen after the ECB. But I'm much more interested in what's going to happen in the Bank of England because it's more measured and controlled. We're looking to build on our relatively small growth and see this through. Whereas the European Union is talking about all sorts of drastic measures and doing whatever it takes. It just reeks of complete desperation to me. But anyway, that's my opinion. Before I start, as always, the risk warning. Remember that spread betting and CFD trading will carry high risk or capital, resulting in losses that exceed your initial deposit. But suitable for everyone, so please ensure you fully understand the risk involved. And the information and comments provided here under no circumstance can offer solicitation to invest. Nothing herein should be construed as investment advice. The information provided is believed to be accurate. The data is produced. Get an educational only. Content of the webinar is supposed to be the moderator at nighttrade.com. Content does not constitute financial investment or tax advice. And trading.com does not accept any liability of the content acknowledgement during the session. So I'm going to do some live charting analysis, multiple time frame trading, again, over live data, which is the best way to do it. I'm going to go through some fundamental analysis, what I think, is going to happen from the Bank of England today. And I'm going to do a real money trade to see something good. Again, I only trade with real money. There's no point doing demo and questions and answers. Remember, these sessions are about you guys. So, let me know if there's any products you want to go through, any thoughts you have, any theories you have. We've got plenty of time before the decision today. So, as normal, type it through into the chat window. If there's anything that you want to, go through from a fundamental standpoint, what I'll do is just go through what I think is going to be affected today. Now, I'll start with the FTSE. So the FTSE again towards the lows. Again, I'll show you the kind of higher time frame mythology. I was writing some pieces for Reuters today, and I think that really once we close, below 6,800, it's going to be a key turning point in the market. Again, I think the real up move in the market begins here in early April, and this will we see the real strength come into the market. So as we know with Fibonacci, when we see a strong sustained move, we generally will see the market correct back to 50%. So realistically for me, I can see that, here in the 38.2 and the 50% are really where the market wants to get back to for me. If we do want to go on and make new highs, then I would say that 7,000 is obviously a key fundamental and psychological level. But I would say that you want to do some kind of technical things, and I would say that realistically, for me, I would take it from here to here, where the market could get to, where it could potentially extend to, would be the top. So, if from a technical standpoint, if the market is going to make some inroads and move higher, then I think the market is going to definitely get 7,000 is looking good, but 6,965 and then 7,075 would be the upper technical levels that I would see be a point of interest. So where we're trading now, I'd say realistically we've still got again quite a long way to go. Maybe 2,000 ticks or so before the market tops out. Where we start to break down, we've got 600 ticks on the low side. Maybe 1,000 ticks to the 50%. So the FTSE really, again, is either going to do one or two things. We're going to bounce off 38.2 and then continue to make some new highs. Okay, that'll be around the 7,075 level. Or if we break through, the 50% is key, and then definitely get back to these lower levels, 6,490, and really 6,300 is going to be an interesting point in the FTSE. And if, again, we've got a lot of these big double bottoms down here. So once the market breaks through these lows at 6,389.5, then the market can definitely look to break through to these lower points. So that's, the FTSE really for me, again, it's just made the higher highs, okay, consistently, but it doesn't like to hold on to them. So when we have seen these, we've seen the market sell off. So I don't really see why we shouldn't, if we hold below the 23.6 and 38.2, target the 50, and then retrace all this move and get back to these lower levels. Okay, what goes up must come down. And for me, realistically, the indices are generally massively overbought. We're looking at $100 trillion in the bond markets right now. Now, I can only go back to the basics economics and what I was told. When bonds are high, that means there's relatively, a good majority of fear in the market. So why the indices, can continue to make new highs is a little bit beyond me. I can make some arguments for this. The arguments are that, balance sheets of the biggest companies in the UK, US, are the biggest they've ever been. You've got Pfizer with their, $100 billion, £100 billion, euro acquisitions. Balance sheets are massively strong. The merger and acquisition proposition are really kind of putting that strength and confidence within, the main indices. So maybe that's why they're so strong. But real economic terms, I don't see the growth. I don't see the employment. I don't see the sustained strategy to warrant the main indices being this high. So I would say that really, FTSE-wise, I can see lower levels being hit. And by summer, maybe even a mini meltdown, to be honest. I mean, every 6 years, the FTSE corrects. We're coming up to that 6th year. And again, the world economic conditions that we've made are completely man-made. So if the wheels start to fall off the FTSE, it could collapse in a couple of weeks. And I think that's probably going to happen. A huge correction is on the cards. So that's the FTSE. Will we be trading the pound against the dollar? Yes, we will be trading the pound against the dollar, because that realistically is where we should see, the most movement. Okay, so that's the daily kind of view for me on the FTSE. Big targets, and again, it's starting to look very, very almost like a self-fulfilling prophecy. The market needs to test lower, and it's rejected, hitting that psychological 7,000 mark. So the pound against the dollar is the same, and we've seen a bit of a spike, just in this last hourly candle, right up to these key fib levels up here. So again, the market wants to hit one spot, 70, another good, key technical and fundamental level. And realistically, the only kind of monthly level, daily, weekly, monthly level we've got is at one spot 69963. So if we see positivity from the UK today, we could see again a bid come back into the pound against the dollar. We've got 70 ticks, 130, potentially up to these top levels up here from where we're trading. We've got another 220 ticks of potential upside movement in the pound, which could continue into next week if we do see some good positive forward guidance, I would say, from the Bank of England. We're not going to see a change in the Bank of England rate today. We're going to stay at 0.5, but we're not focusing on that. We know that pretty much is a certainty. What we're looking for is the forward guidance, what Mark Carney's comments, potentially could be, or any kind of little bits of rhetoric that come out after the decision to bring some positivity. And it's all about thinking about what's safe if you're a foreign investor. Okay, is it going to be London? Is it going to be Germany, Paris, or is it going to be the US? Okay, so what you're looking at when you're trading currencies is just a battle off between which is the strongest economy. And we've seen, the property price in London continue to rocket. We've seen, a lot of things like Battersea, huge foreign investment come in, for regeneration. And that is all pushing the price of London up, and it seems to be the investment. So if you think that the pound and London especially is going to be stronger than, than the dollar, then we're going to be buying into that strength of the pound. So that's how we're looking at these things today. So realistically, we've got this 50% retracement level on the on the hourlies. So if the market does want to hold above this, then these targets are all there to be hit. And I would say all the way up to 1.70, still all the upside targets in the in cable today for me. On the dailies, again, similar situation. I mean, again, if you look at where the up move started to where we're trading now, well, we're right on that 50%. So, I mean, again, I can't stress how important Fibonacci is. We've rejected a close significantly below the 50% in the 61.8. So we're holding on that 50%. Look at the decision point in the market on the dailies, right on that 50%. Market rejects, can't go any lower, closes on. Next day opens higher, gets to 38.2. So the more we hold above this 50% level, 1.6322, the more we're going to look to make them new highs. And the new highs, well, again, we haven't seen new highs up until 2.1 previously. So again, we've got a massive void to fill. So if the market does bounce off this 50% and make new highs, then we're going to see a massive bull market in the short term in the pound versus the dollar. It's fairly simple when you look at charts on the right kind of time frames and overlay the right kind of technical analysis. We close below the 50%, then our target is definitely 1.6456, and then below that again 1.62602. So on the upside, before we make some new highs where we're trading now, we've got again a couple of 230 ticks or so on the downside. Again the same. So I mean, it's the upside and downside potential movements from here are fairly solid, but it's the longer implications of what you want to do. But we're looking for intraday trading right now. So if we're looking to trade intraday trading, then what we're doing is trading within the boundaries of these higher time frames and looking for a movement. So realistically, a market can move 35, 40, 50 ticks in a candle. So if we are going to see these upper levels broke, then we're going to get to here. We're going to get to these upper daily resistance points in cable at 1.68418. If we break lower 50 ticks, then we're going to get to maybe 70 ticks. We get down to these lower fib levels in the intraday on the 1.66942. So we can easily see a spike up or a spike down depending on what comes out from the Bank of England, and the ensuing trading. Right. Can you please present analysis on the dollar Japanese yen from now until market close on Friday? Right. Okay. Well, I can do, but I don't really know what relevance it has on today's trading whatsoever. But yeah, I guess I can do. I'm not going to do that right now because there's more interesting things to look at, to be honest. So let's just go back to what else could be interesting. Gold. Gold's going to be an interesting one today. Okay. So we see that on this hourly Fibonacci setup, we're right below the 423 and we can't get back to that. So that for me is a massively negative scenario for gold. So depending on what could be said from the Bank of England or ECB today, we could see another big sell-off in gold. Again, if we see that negative deposit rates in the ECB, that again is relatively good news in the short term and in economic terms. So that could send gold tumbling down to 1.226.20. And then once we break that, then really we're getting into the hundreds. So 118680 and below. So 1180 for me is a big level in gold. Once we break that, we're definitely getting towards 1,000. Okay, I've said we're going to hit 1,000 by 2015. Printed in the FT, still stand by that, to be honest. I don't see that gold can get back to the highs. There's not enough fear or greed in the market just to simply push it back. So let's just go through dollar yen. Start on the daily, it's dollar yen, bit of a range really. If back from these highs to the lows. So I'd say that realistically on daily value, yeah, market wants to get back to 103. Really, we were just again haven't got back just yet to that 50%. So I still think from this down move, there still is, again, an opportunity to try and test these previous highs from here. Again, if we don't get to that 50% and close below 38.2 at 102.497, then the market one hits the 23.6 around about 101.980. Then once we break that, then the market gets below 100 and carries down. I think personally, if the dollar was going to dramatically weaken against the yen, it probably would have done it by now, but it's difficult to say. I mean, if we look on the higher time frame, we've got this big spike, and the market again has consolidated here and then made some highs. So we're going that consolidation pattern again. So if the market does break these lower fibs on 100 spot 816, then it is going to break 99 and then probably plummet down here. But if it holds above, then it's going to make new highs. So I would say that realistically, 107 looks at a realistic target for the dollar. I still believe that an established economy like the dollar is going to be stronger against, someone like Japan, where they're still massively heavily reliant on exports and they don't have that internal consumption and growth. They always rely on somebody else. So I'd say that for me, the dollar is always going to be stronger than the Japanese yen. So I don't suspect we're going to get lower than 99, spot 943. And I think we're going to make some new highs and maybe get as high as 113, spot 448 by next year. That's what I would say. That's my analysis. Is there anything else anybody would like to go through on today? Maybe UK focused, or maybe again anything to do with the pound. Wouldn't negative interest rates give people a reason to buy gold, Ian? Well, I mean, it depends how you look at it, Ian, doesn't it? I mean, potentially negative deposit rates could mean that gold is more attractive, but it depends what you're looking for a store of wealth. I mean, just because there's negative deposit rates in Europe, would that mean you would go and put your money in gold rather than put it in a different currency, buy some stocks, or do something else? Why would you buy gold? Do you think gold's undervalued? I mean, you have to look at the overall trend for gold. That was up, it's now down. So basically for me, I wouldn't be buying gold ever. If it sold off 1,000 ticks a day, I might buy some for a short-term bounce. But I wouldn't invest in gold now, expecting to get back to 1,900. I don't think it'll get back to probably 1,100. So why would I buy gold on the back of negative deposit rates in Europe? I wouldn't. What I would say is that is generally negative deposit rates. I mean, the ECB will do anything it can to maintain its stability, maintain any kind of growth, and do anything within its realm, probably quantitative easing. Quantitative easing comes back in Europe, DAX makes new highs, gold has to sell off. So it wouldn't mean to me in the short term or the intra-term that I would buy gold. We might see a bit of a spike in gold on the back of negative deposit rates today, but I wouldn't necessarily want to buy into that. That wouldn't be my interpretation of where the safety and where the safe haven was. Okay? Difficult, Ian. Very, very difficult. I mean, let's just take a look at the DAX now. I mean, where's the top? I mean, a lot of people have been caught out, trying to sell the top in the indices. But that it has to stop going up at some point. It can't go on forever, can it? So if we look at the DAX on the dailies, then we're still massively strong. I mean, again, we're looking to hit 10,000 in the DAX. I think that's an absolutely inevitable. So I think that, yes, I think the short-term dip buying is still in play. You look at the dailies, as I've said, you look at all these long wicks. Okay, we can't seem to close towards the low. Yeah, so the market then moves higher. I've said that, we've been dip buying in the FTSE for 6 months. I was printing in Reuters. I've said the same thing, but we're going to hit a point where, again, we see this formation happen from the opposite manner, that we see long wicks at the top and the market can't close towards the high, and then we sell off. So I'd say the psychological level of 10,000 is absolutely inevitable. How high the DAX can go, I don't know. But I would say that once we've hit 10,000, stops will go off and the market will trade certainly higher. But then at some point, we're going to see these corrections. And it might start in the US, it might start in the UK, it might even start in the DAX. But again, we can't keep at these high levels forever. We just can't. I mean, profit taking has to ensue. We're just working cycles. So it doesn't matter how valuable people think stocks are, we work in cycles. So they will have to come down at some point. I wouldn't say I'd be happy buying the DAX for any long periods of time, but you have to go off the technicals. Every time we hit low points in the charts, the market's closed towards the high. So if you see a big sell-off today, I'd be happy to buy and let them close towards the top. So that'd be my advice to you, Ian. But again, as always, Ian, good insights and good questions there. Okay, is there a lot of scope for disappointment with the ECB decision today? Are you bearish, bullish the euro short term? Massively bullish the euro short term. Massively bearish, sorry, the euro short term, long term, forever. In the next 5 years, the euro will split in two. There's nothing more certain. Okay, the euro's finished. Europe's finished. It's over. Okay, it's over before it began. So I would never buy the euro ever. The only reason I buy the euro is to go and buy myself some beers when I'm going sitting in Tuscany in a couple of weeks' time. That's the only reason I'm going to be buying euros. But that's it. I wouldn't be investing in European property. Wouldn't be investing in European stocks. I wouldn't be buying the euro. I cannot be any clearer than that. Okay. So realistically, there is a lot of scope. You're exactly right for a potential disappointment today. But the only potential disappointment would be that they don't cut the negative deposit rates. But I don't think that's a negative thing. Okay, the way I look at it is, if you're doing extraordinary measures at this point in the game, yeah, then there's something's fundamentally wrong. You look at the situation in the UK. We're looking at potentially putting up rates because we've got the growth and unemployment's under control. In the US, they're winding down quantitative easing because the markets are self-supporting. But Europe, out on its own, crazy time in Europe. I know. Let's cut the base rate to 0.1%. Let's bring in quantitative easing. Let's make a negative deposit rate. If all the other major economies like the UK and Europe are saying we're good, we fixed it by what we've done in the past and the 5 years of hardship, and Italy and the ECB and Draghi now are only now talking about extreme measures, then that sends alarm bells to me. So nothing that happens today is positive. The negative deposit rates are unprecedented. Market's trying to make out it's not a big thing. It's a massive thing. It's a massive cry for help. So nothing that comes out of the ECB today is good news. Okay, nothing. It might be good news in the short term. You might see a massive bid in the euro versus the dollar. You might see a bit of a blip up in the stocks, but long term, it's not good. It reeks of desperation, and it just goes to show Mario Draghi does not know what he's doing. The man is clueless. He's last to the party every time. He's been fed following. He's caught his pants down. Nothing good's going to happen for Europe or the European people. Okay, so I mean, I'm being about as outspoken as I can. I do not believe that the European Union has worked or is working, and I don't think it's going to be fixed by negative deposit rates. Nothing Draghi does today in the long term or medium term for me is a positive. It's all bad news. So what else are we looking at, guys? If people sell out of stocks, where will the money go? Well, I mean, where will the money go in? I don't know. Where will the money go? I mean, you could say that the money from gold has gone into stocks. That's why stocks are high. Capital will find a way of going where the most efficient place. So it'll go and find something else. Maybe people start buying wheat crops. Maybe people will pile back into oil, limited resources. I don't know. I'm not an oracle. I don't know everything, to be honest, unfortunately. What I do know is that they'll get to a point where fear and greed take over. And when big stops and big institutions liquidate, their positions in the FTSE DAX and the S&P, then it's going to be carnage, and it's going to be another Black Monday. People are going to keep running for the hills and get their money out. Where they put it, I don't know. Maybe they'll put it in back in banks. Maybe they'll put it back in the pound, anticipating a rate rise. Maybe they'll start, buying tickets to Mars or investing on, property in Mars. I don't know. Who cares? We can't worry about, what is out of our control. All we can do is trade intraday volatility and movement based upon what we're hearing today and what we're hearing in the short term. So the long term doesn't interest me. Okay, well, I can't control the long term. Okay, I'm not going to start investing in the pound now, to sit on it for 2 years, 5 years, 10 years. I'm just not going to do that. I make my money, I make my calls intraday because I'm doing it on movement. I don't care what happens tomorrow. Tomorrow's a fresh day, a fresh start. And that's how we should look at intraday trading. It's as simple as that. What else have we got? Your thoughts on the pound versus the Japanese yen? Okay, I'll do that quickly. GBP, GBY. It's always one you can't find. Okay, I can't seem to find that. GBP. GBP. Okay, am I being completely blind here? Um, okay, don't seem to find the GBP JPY. No, can't find it, so no, I'll have to go through someone else. 1.4, line in the sand for me in the euro dollar. You're a seller against that figure. Keep selling rallies is my strategy. Absolutely, Martin. I'm definitely with you. 1.4 is where the euro dollar is comfortable, and it's where it wants to be. It's where value is. It's where it deserves to be. It doesn't deserve to be any higher. And the highs it got when it got to 1.6, it's unsustainable. Okay, it's just simply unsustainable. Okay, we've got 5 minutes for the figure now. So is there anything else anybody wants to go through finally? Again, all these gains, that little spike we saw in the in cable has been retraced. A great seller at one spot 67916. So lower levels one spot 7314, 166942 could potentially downside movements on cable. FTSE still looking a little bit negative. Break below these short term pivot points. Then 6748 spot 80. Gold, as you know, again as Ian said, we might see a little bit of a bid. He's not really doing anything. He's just trading in a tight range. 1251 spot 40, 1240 spot 30 are the immediate targets. So basically, interest rates 0.5 expected unchanged. Asset purchase 375 billion pounds expected to be unchanged. For me, still not clear on the true outlook on rates. Monetary Policy Committee referring to amount of slack in the economy and how quickly that slack can be taken up will dictate monetary policy. Where is this slack? What is this growth? Where is it going to come from? As I've explained, the majority of growth now is consumer-based. It's based upon people spending money on credit that they don't have, taking money from the houses, and generally it's all coming from the consumers. We recapitalize the banks to make them lend to small businesses, medium businesses, create growth, create jobs, sustainable growth. We haven't seen that. So the picture in the UK is not as rosy as people say. Inflation remains within target below 2% or just at 2%. However, the real cost of living is higher. You don't go to the petrol pumps, you don't go to the shops, you don't buy any durable good really and think, that's significantly cheaper than it has been over the last few years. So the price of real living, the real cost of living is still higher. Okay, we've seen a 13 consecutive months of rise in house prices, but then May, we dropped from 0.7% rise from 1.2 in April. So again, any major drop in the speed of house price appreciation is going to have an effect on the wider economy. So again, where's the growth coming from? Where's it sustainable? That's what we're looking for today. We're expecting rates to be changed. We're expecting asset purchase to be changed, but we're looking for clues, looking for rhetoric, looking for comment, rumors, speculation after the interest rates to see what the forward guidance could potentially be. Again, everyone's going to be holding out for the ECB, but we have seen a spike on the Bank of England before. Nothing to say we can't see it again. Okay. So I'm going to call out the comments, what happens in real time as quick as I can. The only things I'm looking at to be trading will be cable and will be gold. You've got the charts on the screen. Anything I say is just my opinion. I'm not telling you to buy or sell. Got the levels on. Okay, so we're looking out for the headline figure, unchanged 0.5. Asset purchase, 375 billion, unchanged. 2 minutes, guys. 2 minutes before the Bank of England announcement. So no real indication. We're pretty much trading completely flat to where we were on the, towards the beginning of the morning's training session. So absolutely no idea. Absolutely no idea on the direction of cable. Doesn't really matter though, guys. And we're looking for a directional move, a directional trade based upon the short-term volatility. We're not trying to be, again, some oracle here and pick out where the absolute highs and lows are going to be for the day, the week, the month. We're looking for that intraday movement, that quick bit, that quick snippet of where we can get into a trade for relatively low risk and make some ticks. That's what real trading is. Okay. It's not about being right. It's about being right at the right time and taking your money. That's what trading is. Okay. A minute now, guys. A minute. 0.5 expected unchanged. 375 billion asset purchase expected unchanged. Watch for the movement. Keep an eye on gold. Unchanged, 0.5. Okay, so just wait for any comments to come out, guys. It's not over just yet. There might be some market comments, some rumors. So we're unchanged pretty much across the board now. 0.5, nothing said about the asset purchase, so I take that as completely unchanged. So, still looks a little bit negative in cable. But again, we've got this key level here. If we don't break this, then I guess the market will definitely look to test and get back up to 1.67730. Kind of might have bottomed out short term in the FTSE. Again, we've got some good pivotal key lines of support on this 2.61 retracement level that could act as support. So moving average would be certainly a point of interest. Okay, gold not really doing anything, just towards the top of the hourly Bollinger Bands. So, okay, well, it was a non-event then. There we go, guys. You can't always get it right. I guarantee, though, at some point in 2015 or in the near future, we are going to see a big reaction to the Bank of England minutes, that is for sure. I guess we're all waiting for 12:45 in the ECB because that's where the fireworks are going to be, let's face it. So, again, look for 1.67730. That's definitely where the market would look to get back to for cable. Gold, really, maybe it's going to start to drift down before the ECB. To be honest, guys, here and now is not a time to trade. This is where you have to be patient. That's where you have to sit on your hands and wait for the big event. If we had seen a big movement, positively or negatively in cable, that might have been a precursor or an indicator to what people were thinking for the ECB, but it doesn't really look that way at all. Maybe this candle here was somebody taking a position ready for the ECB or Bank of England, but realistically, that's just speculation. You just don't know. It might have been somebody taking this opportunity to liquidate a large position. Yeah, Forrest Go, good to see you. Yeah, the market has been tight for the past 3 weeks. I don't know if that's a good or a bad thing. Consolidation is what we generally, get after a long-term rally, and we can see, again, the charts look so different on the time frames. If you look on the monthlies, look how strong that FTSE looks. You can buy any low, okay, in the FTSE. We're towards them highs, but you can see, you rightly say, you can see the consolidation happening. And look at the ranges now over the last 2 monthly candles, a lot lower certainly than they have been previously. So that leads me to believe, are we topping out? Again, let's look at some other indicators. What can we put on? Let's put the D-marker. D-marker is a good one. Let's put some RSI on. Where's RSI? So, if you look at the, the kind of basic indicators that I'd ever use, look, and the monthlies, we're ready for this bear reversal. We've hit the tops now. So unless we bounce up aggressively, the midpoint, then the market is looking to dip down, and get down. So again, the RSI looks like it's put, over 70s, overbought periods on the monthlies. It's looking like we're running out of momentum. So the FTSE really, again, could really start to sideways range, make some final attempts to break 7,000, and then bang, we've got all these levels to aim for. I don't see how the FTSE is going to stay up. I just don't. Look on the weeklies again. Look at these brilliant wicks that you keep buying the lows. You can even draw yourself a nice trend line. Perfect. But once we again fail to make and hold on to these highs, this trend line's back. So we're looking to break 6706. The market's looking to get lower anyway, just to find some support. So negative on the dailies, same kind of scenario. Higher, high, higher, high, higher, high, but only just every time, 1, 2, 3 days, bang. 1, 2, 3 days, bang. So we haven't seen that scenario just yet, but we're on the 4th day now. So we start breaking the lower Bollinger Bands on the dailies and 6706.5. Then this trend line for the weeklies looks bang on to me. So that's another, could see a big drop in the FTSE from here. And then, look at your hourlies, the same kind of scenario. Once you break your lower fibs and you've got this daily resistance here, then the market, again, big gaps down to these, this trend line and resistance. So realistically for me, unless we see some very good news or the markets take, the ECB's cut or potential cut as very good news, I see some sort of potential, big crash. But you have to look again, the hourlies, that we look at the monthlies and the weeklies, again, you take the RSI and the D-market, they're very lagging. They're a bit more responsive on the hourlies. So we've kind of already sold off, quite a lot on the hourlies. So you might have to wait for the market to spike back up to these higher levels before you then sold back down, especially on the hourlies. So be very careful on that respect. So awful for traders, really. I mean, you just got to realign your expectations for it, Scal. You really have to think about what you're trying to get out of a trade. What I would say is look to hold a trade for no longer than 1 to 2 hours. That'd be my advice. And, look at your average trading range and maybe, only take 20, 30 ticks out of an intraday move. But look to do that 2 or 3 times a day in 3 different markets. That's how I'd advise you to trade now. If you're trying to hold on for the highs and lows of the day or for a couple of days, you're going to get churned around. So now it's about, again, going back to old style trading of finding bounces, support and resistance and range trading, rather than this very aggressive breakout trading that we've seen. If you try and trade the markets now as you did 3, 4, 5, 6 weeks ago, you're going to get killed. You're going to get, stopped out at every point. So you're looking for smaller moves, okay, but more of them. That's how you trade these markets. You don't trade the big breakouts as we saw until we see that inevitable break and selling, and then the markets crash, because they will do. They will significantly correct, call it a crash, whatever you want. It doesn't matter. There'll be a significant correction in the indices at some point in the next 18 months. Otherwise, I will stop trading. I won't understand the markets, okay? Nothing can go up this aggressively and not correct. The quicker it goes up, the quicker it goes down. That's not Steve Ruffley. That is economics. That's cycles. That is charts telling me that. That's longer than I've been around, cycles of data telling me that's what happens. Selling may go away. Love a good cliche. Wow, Ian, you're a poet and you didn't know it. Absolutely, absolutely. Well, again, selling may go away. Summer months are generally very, very quiet because, people go away and that kind of stuff. So I'm expecting, to be honest, I was writing a piece for Reuters this morning and I'd expect the summer to be a bit of carnage, to be honest. A bit of summer carnage and maybe we see some big solid corrections in the stocks. It has to come, doesn't it, guys? It has to come. And generally, we'll probably all miss it because it'll be so quick and violent that we won't want to sell. We'll probably end up buying the bottom to get killed. And that's just how these things work. But once you see that market going, if you pick bottoms, you get smelly fingers. Once these stocks go, they're going to be aggressive, guys. So watch out. Yeah, absolutely. June was pretty active because, again, you get that, get a bit of a thinness in the markets. The big fund managers, and the big kind of institutional players, we're all sat on the beach at Butlins with the kids. Well, probably not Butlins, but they're all, being normal people. So the markets are notoriously difficult to trade in summer months because of the, the less in liquidity. Yeah, that's it. Absolutely great. In the Hamptons, sailing their the super yachts around the Med with all the rich and famous. But, don't hate the players, hate the game, I guess. It's not their fault, is it? Again, the opening part of my book, The Rough Guide to Trading, that was going to be published later on this year, goes to say that, we can demonize the bankers, we can demonize, traders. But let's face it, where did the demand for all these products and, this aggressive financial planning and investment come from? It came from ordinary people. So we're all not guilty, but we're all part of the same game, aren't we? We all want the best for our families, ourselves, and our money. And wherever there's, demand, there will be supply by the institutions and people that want to, help us invest that money. So we're all in it together. You can't just sit here and demonize, the bankers. If anything, the politicians are as much to blame as anybody. Again, they keep squabbling, saying it was the last government, the government before that. There's only ever been 2 governments the last 100 years. So you think between them they could toss it up and get it right. But there we go. The banks are only playing within the rules of the framework of the game. So how it's all going to end, who knows, guys? Who knows? But we're not here to kind of speculate about that kind of doom and gloom stuff. All we're here to do is look at the intraday and try and scalp, that 20, 30 ticks and make a little bit of money. Well, we're very, very kind of you for it, Scal. I'm sure if you're an intraday customer, you'll get a free copy. So that's going to happen. Don't you worry. Sachin, euro dollar, buy, sell, euro dollar, sell. Again, I can't make that any clearer. Don't sell it right now. Wait for the obviously decision, but. Again, longer term, medium term, short term, I would always be selling spikes in the euro versus the dollar. Absolutely. I mean, absolutely, Greg. I think this euro is going to spike up. I think it's inevitable that everyone's primed for some sort of, cut, some sort of negative deposit rate, something positive from the ECB. So when ECB does something positive, the markets have to react that way. But it might be short-lived. I would say that we might see a massive spike in the euro versus the dollar, initially. And then the market just completely dumps. So either position yourself now because you won't be able to buy it. When that rate decision comes out, you won't be able to buy it. So you either go long into it expecting that's what the market's going to do, or you wait for the first 5 minutes and you do a continuation of a 50% retracement in the first 5-minute candle, you do the retracement. That's the only way you can do it. If you don't have direct market access, you cannot trade the figure. It's as simple as that. You have to wait for the first 5 minutes. But I'd be selling any spikes. Damn right, I'd be selling any spikes. There's no way that this news, as I've said for all the many reasons I've said, it's good news. It's desperation. Desperation. It's really poor form by the EU to put the rest of the world in this situation. I think it's not responsible. How can you be out on your own doing negative deposit rates when nobody else is even considering that? It just doesn't make any sense. And the Eurozone is not one congruent nation like the US. The US, they might be a bit mad and might be, kind of a number of different states, but they're all American. They all have the flag, they all pledge their allegiance, and they all use a dollar. You go to somewhere like Italy and you ask them, someone in Sicily, they're Italian. Say, no, I'm Sicilian. So if they're not even Italian, how can they class themselves as European? It's only a matter of time before Greece defaults. Greece are in a worse state than they were prior to the credit crunch. And what Greece got to lose? They go back to the drachma, holiday, tourism, donkeys. Maybe they'll be happier that way. Greece are not a superpower. They haven't been for thousands of years. They're not going to be an economic, banking superpower ever, ever, ever again. They'll be lucky if they can ever borrow money again. So what would you do if you were Greeks and you were suffering? Do you know what? You can keep your money, Germany. We're out. We're back to the drachma. We're looking after our own. I can see that happening in the next 6 months easily. Why would they? If the King of Spain can't hack it, then what chance has Greece got? What else we got? Sorry, guys. A few questions have come up. But it's a big player in the market. Maybe try some first hit, stop loss after back, so be careful. Yeah, I mean, you don't know. The big players are going to be involved in this. This is for sure. But when big players are involved, guys, you've got to be careful. I mean, you've got to be very, very careful. They'll push that market to your stop and then 3 times over. Where will you be when number comes out at 7.45? You've lost me, Greg. I'll be trading the ECB. I'll be somewhere else. All you have to do is Google me. You'll be able to find me where I'll be. Iceland, yeah, absolutely. Are you in the US? Yeah, I'll be somewhere else. So just Google Steve Ruffley. You'll be able to find where I am. Yeah, I mean, obviously, we want to hear what Draghi has to say for himself. I mean, it's very coded messages. I was reading, the 3 criteria that Draghi set for lowering interest rates, for introducing things like quantitative easing and negative deposit rates. It was like reading a cryptic crossword message. It's so difficult. I know these guys have to be, very coded and guarded in what they say. But realistically, for me, the whole reason why the country in this kind, the European Union is in this kind of mess is there's been no forward guidance. And it's the same with Yellen. Same with the Bank of England. Nobody comes out and says something that's cast iron and tangible. And even with Jean-Claude Trichet, if what he didn't say was just as good as what he did say. Okay, and we just don't get that these days. We just get these long-winded rhetoric that don't really mean anything, even to the people that understand these things like myself. So, bit of a bid coming back into the FTSE now. So, 6819 spot 30. Again, that was a good bounce off them lower fib levels, but nothing else has really moved. I would say that realistically, all we're looking for from Draghi, for him to say something that we're going to do whatever it takes. I know it's extreme measures in the short term, but it will work in the long term. If he says something like that, then there will be some credibility behind what he's done. If he comes out and says we did it because that's all we could do and that's all we really have in our arsenal, then the markets are going to dump. Because it shows Draghi does know what he's doing. The European Union is desperate and all it's trying to do is prove itself on the world stages and keep its credit rating up. So if he doesn't say something positive to back up what he does, the markets will go absolutely bananas and absolutely sell off and go crazy. Okay. Yeah, there's no transparency, no communication. You're absolutely right for it, Scal. And, that's been a historical thing throughout, the ECB and throughout the Fed. And I really thought, Mario Draghi would be something different, with his background being from, Goldman Sachs and, being used to making large amounts of money. I thought he'd be a bit more kind of savvy to what he says to the markets to control them. But unfortunately, it just hasn't been, to be honest. He's been a massive disappointment. And, again, these are just my opinions, guys. Again, I've always been honest to you lot, and we all get together and we'll talk open and honestly about what we feel. And it's not about being right, being wrong. It's not about demonizing people. It's about making money. So it doesn't matter, if Mario Draghi's done the right or wrong thing. All I want to be able to do is make some money from it. Yeah, I mean, I never thought I'd hear myself saying, but price stability. I do miss Jean-Claude Trichet a little bit because you know where you stand, you know what to listen to and what to not listen to. But with Mario Draghi, you don't, unfortunately. It's always, a coded message. But there we go, guys. This is the rules of the game. This is what we've got to play with, and this is what it's all about. Okay, guys. Well, pretty much it's all about the ECB. Okay, so 12:45, we're going to see, the ECB come out with some big changes. I mean, the kind of mean and average that I've been looking at is the main interest rate. The average is 0.118% is what we're looking for. The marginal is 0.57%, and the deposit rate is minus 0.1. So interesting set of figures. Interesting to see what happened. I mean, the FTSE's taking a big. Maybe because we didn't sell off and there was no real news from the Bank of England. So maybe everyone's anticipating that we're going to see a spike and we're going to see a good reaction from whatever Mario Draghi says. So, we're up, 25 ticks or so. The market's certainly getting a little bit of a bid in it. Watch the level here at 6828, spot 65. And then above that, probably 684750. All right, guys. Well, listen, that was Bank of England, bit of a non-event. Again, unfortunately, I can't make the markets do what they're not willing to do. Everyone is waiting for the ECB. So good luck trading that, guys. Do take a screen print for some levels if you want to take them away with you. And I wish you all the best of luck. Thanks to the guys on FX Street, as always. Got a full schedule on FX Street for the rest of the month, so do join me for other presentations. And if you want to get me on Twitter and have a chat, it's at Steve Ruffley.